Ruthierocks, and we are in sunny Las Vegas, which is overcast today. I don't think it's going to be overcast all day, but it's beautiful right now. When I went out to work out this morning at 5 a.m., I came take an hour and a half in the fitness center. When I came back out, the sky was just gorgeous. Anyway, loving Las Vegas, and it is the uh, first full week of December, and we have some interesting stats for you today. The median single family home price ended up at 435,000 for November. And that is what we started out in January, or ended up in January with. We didn't start out in January with that, but we ended up in January with that because the end of 2021, it was still under 400,000. So took a big jump in December, and then ended up in January at 435,000. And so let's just look at that before we get into the other stats today, since we're talking about that first. So see, here we go. 435,000 was the median in January. And then it jumped in February to 450,000, in March to 465,000. And look, in May and June, it was 485,000. Then it started to drop. Interest rates went up. July 470,000, August 452,000, September 450,000, October 445,000, and now in November 435,000. So we shall see what we end up for the year, but I think that that's a very healthy sign. You know, we know that the prices in real estate are localized more now than ever. It takes a lot of income to buy a home, much more than it did in the 70s. In the 70s, I think it was a third of your income, and now for the mortgage, and now it's way higher than that, almost doubled. So anyway, home ownership is declining in some. Homeowner occupied is declining in many markets. I did some research and I looked into the US Census Bureau over the weekend. And would you believe, in Los Angeles, only 37% of the homes that are owned are owner occupied. That is a huge investor market there that is renting. Now in Vegas, what do you think it is? It's 57% of homes are owner occupied. I think it's dropping to 54. So don't have my note here, but I think it dropped to 54, actually, from 57 to 54 recently. So in the past couple of years. So anyway, the census is every 10 years, but I think it has dropped. But the point being that homeownership is dwindling. And the people that can afford to buy homes right now with the high interest rates, that's dwindling. So when you look at our stats and you see the quarterly recap of investor sales, which is in the lower right hand corner, it says that we are maintaining a year to date daily sales to investors of 31. Now, I like to do the research on where these numbers come from, and some of those some people buy them like an investor or a second home, and then they change their mind, and we're not aware of that. So that 31, in my opinion, might be a little high, but we shall see as time goes on, because that's a big part of the market. Anyway, let's look at another interesting thing that happened over the weekend. The single family homes that we listed over the weekend was 127. Yes, just listed over the weekend, 127 homes. That is huge. Now, of those 127 homes, another interesting fact, and the trend is breaking a little bit, that's why I'm just calling it interesting, is that 51 of those 127 homes were the median price or under, meaning 435,000 or under. And for a total of 2,489 single family available homes in our zip code area that we use, We're 435,000 and under, which is 37% of our market, which is very healthy that it's that much when you look at how many the investors are buying. And then you go over to the right middle part of the chart, and you will see that investors are still I mean, not investors, I'm sorry, $1 million home buyers still maintaining 4 plus a day. Now, we started out the year at about, I think, 4.8, and we called that 5. Now we're down under 4.5, so I'll call it 4. But still, that is an amazing amount of homes. There's $903 million plus homes on the market today, and that's 10% um, of our market. So we have 8,720 available properties. So it's probably about 9%, but it rounds up. We have 8,720 properties available, and which is 128 days of inventory. And that's based on 68 per day, which is what we were doing in November. Now, if you go down to the next part of the chart, you will see the month-to-date sales compared to the same month last year. So you'll see that we have sold 139 homes in the first several days of December. Now, when you think about it, you can't count Saturday and Sunday because nothing records. But it's 70, that's 70 daily sales the first part of December, which is on par with November being 68. But here's what I want to tell you. I think it's going to be more in December. I think we're going to have more than 70 a day as time goes on throughout the month. And one of the reasons why I say that is, sorry, John's phone just went off. He'll turn it off. Anyway, what I'm going to tell you is that I think more investors are going to jump in the market in December. They have cash they want to get rid of, whatever. So I think we're going to see an increase, and we'll see. We'll keep tabs on the non-owner occupied sales. Last year we were, oh my gosh, we did 268 sales a day in the first part of December last year. That is just unbelievable. Unbelievable. But look at the median price in December. This is what I was saying earlier. In December, the median price was $386,000. And by the end of January, it jumped from 386 to 435. Huge jump. Huge jump. So, if you were part of the group, let's look here again so y'all can understand what I'm trying to say here. So in January, it jumped from 360, 368. So hang on just a second. Hold on, everybody. 386. Yeah, I'm sorry. It jumped from 386 to 435. So if somebody bought a home in January, they're okay. They have not decreased. They have held steady. But February, March, April, May, June, July, August, all the way down. If people bought in those months, February through October, they've had some decrease in appreciation. But don't wait to buy real estate, right? Don't wait to buy real estate. Buy real estate and wait. These things will adjust over time. So these people took a little bit of a hit, but you know what? Their interest rates are the reason why they did it is because their interest rates are low. So over time, they'll be fine. They'll be fine. Now, a lot of people might not know this. Let's go back here. But when you have a very low interest rate, if you look at an amortization schedule, and you might want to do it if you've got some buyers that bought at the height of the market, but they got like a 2 or 3% interest rate, do an amortization schedule for them and show them the benefit, even though the prices have adjusted down. Show them the benefit of how much of their payment is going to the equity of the home. So more goes toward principal, the lower the interest rate. And over time, that interest goes down and down and down. So, over time, it'll probably equal out for them. I didn't do a a spreadsheet on it, but I would imagine that they're not going to get hurt too badly if they have to sell in the next couple years, because we, of course, we don't know. We don't have a crystal ball. We don't know if the prices are going to go back up, or if they do, how much they will go up, or if they're going to go back down. We've got so many things. I think on Wednesday or Tuesday last week, there was three people: Tom Ferry, Sanders, and Childers. They did a podcast, and they were talking about the interest rates. Oh, they're going to go sky high. They say Powell's going to take them to 10, and then on Friday they dropped. So we really don't know what's going to happen, and I don't know why. I mean, those were the mortgage rates. They went down to under 7. So, depending on your credit score, depending on your loan program, you could get down to 5.5. So that's not bad. 5.5 is not a bad interest rate. Anyway, that's the tale of the tape today. It's very interesting statistics going on today. And we shall see what happens to the median single family home price. It may hold steady. And if you sold, and anybody that bought a house prior to 2022 is going to be fine. And the people that bought a home this year, hopefully they got that low interest rate and they will be fine too. Not as fine as they could be, but we'll see what happens. It's not even a year yet, so we shall see. Um, there we go with the U.S. Census Bureau, 54.8% right now, according to the Census Bureau. I think it's a little higher, but anyway, our owner occupied in Clark County. Now, why would that be different than Los Angeles? Why would we be possibly increasing? Well, because we have 6,100 people moving here every month, and a lot of those people are from California, and they are bringing money, and they are buying homes. So that's why I think we're gonna show that there's an increase in our percentage of owner occupied homes, which I think that's a good thing. I think that's solid. And then there's the Los Angeles city, 37% only are owner occupied. So that means that there's a huge 63% of the homes in LA, Los Angeles city, are investor owned. Interesting statistic. So let's move on here. We have a tip to give you today before we end our show. And we did the Be the CEO of Your Life class last week. And one of the things that we talked about was sly broadcast. Now, we know that so many people nowadays don't answer their phone because they're not being rude. It's that they're being treated rudely by all the spammers. So what sly broadcast, it's an app. And yes, it's not free, you have to pay for it. But you can send a pre-recorded voicemail to your neighborhood, to your database of when you have the phone numbers, your past clients, whatever. And you can say, hi, this is Linda. I sent you a note about my client who's desperate to buy a home in your neighborhood. If you've had any thoughts of selling, would you call or text and let me know? Now, this is the holiday season. So I might say, hi, this is Linda. I sent you a note wishing you happy holidays. And if you're wondering about the real estate market, please text me or call me. I'd love to hear from you. Thank you. That would be this time of the year. You may or may not have somebody who's desperate to buy a home. So your message needs to be on point and be the truth. You never want to do this if you really don't have someone who's desperate to buy a home in your neighborhood. Anyway, I hope you all have a wonderful day. I have to tell you that today from 10 to 1, we are having the 1031 tax exchange guru, Sheila from Old Republic, an Old Republic tax exchange company, not the title company. And she's from Phoenix, and she's come up here to do our class for us. And the interesting thing is she did it last month, and we had a full house. And it's interesting, since Thanksgiving, we've had more Zoomers than people participating live. So I don't know how many live people she's going to see today, but we've got a full house on the Zoom for the Zoomers. So it's a fantastic, fantastic class. It's she goes above and beyond. Everybody thinks they know about 1031 tax exchanges until you learn more. Well, if you come to the class, it's you can still sign up. You have a half hour. You can still sign up and Zoom in because then you'll be able to speak to these investors that are buying homes, and they have all different types of situations, and that's one of the things I love about the class. She goes into all the different situations with the 1031 tax exchange that your investor whom you're talking to, maybe from California, who wants to sell there, buy here. And she some people think, well, he owns a fourplex, he can't buy a single family home. Yes he can. Yes he can. Anyway, please sign up at bee.vegas and sign up anytime, like probably right before 10 till 10. That gives our monitor a chance to get you the link and send you the PDF of the class outline. Um, and it's a great outline too, so you can take notes on the outline so that you remember what you're learning. So many bits of knowledge here. I will look forward to seeing you Wednesday, and it's getting closer to Christmas. Today it's 20 days away, and Hanukkah's on its way as well. So we will talk to you all. And if you're an Agent Formula member, a blast was sent out yesterday to all your database, and we gave them a calendar for what the events are in Las Vegas, and we featured the Ethel M. Christmas Cactus Garden, which is fantastic. And we featured a video about it. Um, anyway, again, if you're an Agent Formula member, that went out to all of your uh, database. And we're going to do one more email this month, and it's going to be about the market and why uh, chief economist Dr. Young thinks that we are very solid in our real estate market, and this is something that you're going to want to share with your friends, your family, your past clients, your future clients, your people on the fence, so on and so forth. I love you all, and I'll